Hello, today we are solving October 2023 paper Unit 2, second question. The following information is available for Matara Clothing PLC at 30th September 2023 subject to some final adjustments. So this is the trial balance sheet of Matara Clothing PLC given, and we can see that there has to be some final adjustments which needs to be done here. Okay, and then after the adjustments you are being asked to prepare the statement of financial position for Matara Clothing PLC at 30th September 2023 in accordance with International Accounting Standard IAS 1. Okay, so now let's prepare. So before preparing, okay, statement of financial position, you will have to identify all the assets and liabilities in this trial balance which is given, so that we can calculate the calculate the total assets, and it should be equal to the capital plus liabilities. Okay, equity plus liabilities in this case. Now let's mark that. So let's see. First one is the bank loan. Generally it is a non-current liability. Okay, so means you need to pay over a long period of time, but here we have to verify there is a final adjustments. It says that the bank loan is due to be repaid on 1st February. It needs to be repaid in February 2024. So this means that this is a current liability. This is going to come under the current liability category. Okay, then bank overdraft is also a current liability. Okay, it needs to be paid within this year. Then you have the cash. Cash is going to be the current asset. Okay, current asset. Then you have computer equipment carrying value. Okay, this is a asset. Okay, this is a non-current asset. So let's write this as non-current asset. Okay, it's a non-current asset. And then you have 9% debenture 2027. So this is not this year due. So this is like a loan. So I am going to classify it as non-current liability. Okay, non-current liability. Then you have the debenture interest that needs to be paid with every year within this year. So this becomes a current liability. Okay, this is also going to be current liability. Now factory. Okay, factory fixtures and fittings at their carrying value, these are going to be non-current assets. Okay, non-current assets and current assets. So I am going to classify it as non-current assets. Then you have the foreign exchange reserves. This is going to be equity. Okay, it is going to appear in the equity section. And then you have the general reserves. Okay, general reserves is also equity. Okay, then you have the bank loan interest that needs to be paid. So it's going to be a current liability. Okay, then inventory at 30th September 2023, inventory, it is a current asset. Okay, it's a current asset. Then inventory at investment property at cost. Okay, investment property at cost, it is a non-current asset. Okay, this is a non-current asset. Then land at cost, this is also going to be a non-current asset. Then machinery we have, it is a at the carrying value. Okay, then motor vehicles at cost. Okay, it's a non-current asset. And there is a depreciation for this because it's a cost, not at the carrying value, so you will have to calculate. Then other payables. Okay, other payables becomes your current liability. Okay, which you have to settle within this year. So current liability, then current liability, then other receivables. Okay, other receivables are going to be coming to your business, so it is going to be a current asset at this point of time. Then plant and equipment at cost, it is a non-current asset. Okay, it has got some depreciation calculations which we have to do and state it at its carrying value in the asset section. Then provision for possible damages in the lawsuit. Okay, the provision for possible damages in the lawsuit, here he says that the lawsuit case will not be heard in the court until 2025. So this one is going to be, okay, this is a long term liability. Okay, this is a long term liability. So I am going to classify it as like a loan. Okay, so for 1 year, so it is a thing. Okay, it is a, this is going to come under the non-current liability. And then retained earnings. Okay, retained earnings, so retained earnings is going to appear in your equity section. You have to do some adjustments because there is a some additional information is given regarding the retained earnings. Okay, regarding the retained earnings, this year's profit is not included in the retained earnings balance above. The profit for the year is given, so we have to adjust all those. We'll see at the end. Then share capital, this is also going to appear in the equity section. Share premium is going to appear in the equity section. Then you have the taxation. Okay, the taxation, this is going to appear in the non-current liability, and it is also going to appear in the current liability part of it. Because, okay, why? Because here we can see that the taxation for the year has been agreed with the tax authorities. Taxation due, so the taxation due, this portion is going to appear as a current liability, and the remainder is to be paid on 31st December 2024. So it has both appear, it is going to appear in the current, non-current and current liabilities. Okay, then trade payables. Okay, trade payables is a current liability. So current liability. And trade receivables, okay, it is a current asset. It is a current asset. And the trademark, it is going to be a non-current asset. It's going to last, its benefit you are going to reap for more than 1 year. Okay, so the company is going to reap for, so that's how you classify. Now we'll start including everything. Assets, non-current assets. Okay, then you have current assets. Okay, then you are supposed to calculate total assets, equities and liabilities. So it is going to be equities, then you will have non-current liabilities, non-current liability. Okay, you will have the current liabilities section. Okay, so then you will calculate the total equity and liabilities. So you will form the total equity and liabilities. So you should see that the total asset section, okay, the total asset section and the total equities and liabilities section, they should balance, okay, in the balance sheet, in the financial statement of financial position. So you can write the heading, this is the statement of financial position for the Matara Clothing. Okay.